I do think, as bad as March was, we've probably seen a big part of that adjustment. And now I think the risk reward is quite good for stock.
Tom Lee begins by challenging everything investors think they know about Bitcoin. In a world shaken by war, inflation shocks, and aggressive monetary policy, he argues that Bitcoin isn't just surviving, it's positioning itself as a core macro asset. While most investors are still treating it like a speculative trade, Lee sees something bigger unfolding, a transition from risk asset to digital safe haven. The question is no longer if Bitcoin belongs in portfolios, but whether investors are already too late to understand its true role.
As March unfolded, the war looked like not to be a short war, but, one that was longer. And I think markets have been adjusting to that. But as you know, we're still in the midst of this fog of war because we don't know when it ends. But we did look at the past 7 major war events. And the stock market adjusts pretty quickly. Within the first 10% of the entire duration of a war, the stock market usually bottoms. So, World War II was almost 5 years, and the market bottomed 5 months into that war. So I do think, as bad as March was, we've probably seen a big part of that adjustment. And now I think the risk reward is quite good for stocks.
And 90 to 95% of the weakness is behind us, in your view?
Yes. And I think people are kind of torn because if someone sold in March and the market, they may have sold 3 or 4% off the highs, and we're just 5% off the highs, they've got a dilemma because the market's only a little bit lower than where they might have sold, but it wouldn't take a lot for the markets to begin to recover. So I do think investors who've gone to cash really have to start to think about how war, as much as it's a crisis, people focus on the negatives initially, but then they need to start thinking about the opportunity on the other. Really spring-loaded because, one, we know that policy and the path of the war is more important than the central bank. So that's the single biggest driver of the stock market. The stock market's getting a bit of a boost from all the defense spending. So the economy's not in horrible shape.
Oil stocks are doing pretty well, too.
Yeah, oil stocks are doing well. But then if there's Middle East peace, of course, that's got a lot of future benefits. So I think if there is a surprise and the war does end, the reaction would be very explosive, as you said. We had several inflation shocks now in the last 6 years, right? The first was the COVID supply chain, and then was the tariff shock, and then this is a war shock that's going through, and nobody wants consumers to suddenly expect higher prices. So I think that's what everybody is watching carefully. But it doesn't mean that just because prices are going up because of gasoline, that inflation expectations are unanchored. So I do think right now it's a critical time for the Fed to have credibility and for consumers not to expect higher prices going forward. Yes, and I think investors need to keep in mind that wartime spending is, $30 billion and maybe going up to $100 billion a month of economic stimulus, and that does boost the economy. Gasoline, every $10 is about $4 billion to $5 billion a month hit to the consumer. So the monthly spend from the war is much higher than the effect from oil.
When you step back and look at the broader picture, Lee's message becomes clear. Markets have already absorbed a significant amount of bad news. Historical patterns suggest early bottoming during conflicts. Economic fundamentals are not as weak as feared. Potential catalysts for recovery remain strong. All of this points to a favorable risk-reward setup for equities. That doesn't mean volatility is over, but it does mean that the balance may be shifting from downside risk to upside opportunity.
I think Bitcoin will likely drop about another 30% against gold, 30 to 40% against gold as the year goes on. And I want to sort of talk about how this is likely going to play out and why I think that. Do you guys know how with like altcoins, we talk about how this is sort of like the initial capitalization phase? And then just because it went up over here doesn't mean it has to go up forever. And then you can see how alts against Bitcoin then do this thing where they just kind of bounce around. You see that? And honestly, I think they'll probably even go lower before bouncing back up. And they could even take out these lows eventually. Monetary policy does remain restrictive. Now, if you take the same idea, but look at Bitcoin against gold, you could argue that this was the initial capitalization phase. And then locally, we've entered into a period where Bitcoin, frankly, has been having a harder time putting in new highs against gold, at least durable highs. You can see that there is a chance here that what if Bitcoin has entered into this sort of oscillator area where it goes from one extreme to the other. And so the argument here is that Bitcoin will likely come back down to the lows when valued on its gold valuation. Just like it sort of swept the prior highs, it can sweep the prior lows. One of the things you can also look at is if you look at ETH's market cap valuation against Bitcoin, we talked about the same idea, right? Where it essentially just is going sort of from one extreme to the other. You see that? So what I think is likely to happen here is I think that Bitcoin will likely bleed back down to the range lows. Now, I put this video or these ideas out. A lot of people don't like them. They primarily don't like them because we just were in a counter trend rally. But I will point out that every March of every midterm year, Bitcoin has that same rally against gold. You can see it happen in March 2022. It also happened in March of 2018. You can also see kind of a small one right here in March of 2014. And none of them represented the bottom for Bitcoin's valuation against gold. Sometimes people look at how long it took for Bitcoin to bottom against gold in prior cycles, and you can see that in, say, 2021, it took around a little over, a year or so. In 2018, it took about a year. In 2013, 2014, it took a little over a year. The thing now is that this cycle, it bottomed earlier than it normally does, and it's already taken over a year, right? It's already been 62 weeks. The problem is that just because if you had assumed that it would have bottomed after only, say, like 52, 55 weeks, you would have thought the low would have been back over here, back in December. And a lot of people did. They're like, oh, look, Bitcoin already had its bear market against gold, therefore it won't go lower. And then it did eventually go lower. So my guess is that Bitcoin will continue to drop against gold. And if you look at this, it would suggest, dropping about 30, 35% would get you to sort of the range lows on the Bitcoin gold valuation. Now, this is the price valuation. We could also look at it on Bitcoin's market cap valuation, but of course you won't really see any difference. It's the same general idea, essentially about another 30%, 30 to 40% drop in order for Bitcoin to get back down to those lows when valued against gold. Doesn't mean you can't have counter trend rallies. We've had plenty of counter trend rallies on the Bitcoin gold valuation in prior bear markets, right? Like they happen quite frequently, and that doesn't necessarily mean the trend is over. So just keep an eye on this. We're going to keep this one to be a shorter video, but I do want to put this out there because historically, when you're near the end of a business cycle, it's the lower risk assets that tend to do better. And in this case, that is in fact gold. It just is what it is. You can see how the stock market already broke down against gold, and Bitcoin started also showing weakness against gold a couple of years ago. It's just the way the market cycle works, right? Or at least it's the way the business cycle works. Altcoins bleed to Bitcoin, Bitcoin bleeds to stocks, stocks bleed to gold. But because Bitcoin's bleeding to stocks and stocks bleed to gold, then Bitcoin, by the transitive property, is also in fact bleeding to gold. And a counter trend rally in March of midterm years doesn't really change that, right? Like it just doesn't. And this chart kind of shows you the idea of it being a late business cycle environment. The ITC business cycle chart created by taking the S&P 500 divided by the unemployment rate squared, multiplied by U.S. interest rates, multiplied by the U.S. inflation rate year over year, normalized by M2. It shows you why we're seeing risk roll down the curve rather than up the curve. And it's very different than what a lot of people have previously experienced. And I mean, it is. And you have to sort of adapt to this stuff. And maybe we could even look at the valuation of Bitcoin against gold in terms of year-to-date ROI. Look at 2026. Look at 2022. Look at 2018 and look at 2014. So if you take all these midterm years off and look at the average of prior midterm years for the Bitcoin gold valuation, it's doing what it always does. In fact, on average, by this point in the midterm year, Bitcoin is down about 29% against gold. And right now it's down about, 27.5%. So all in all, Bitcoin's doing what it normally does against gold. I would sort of look at the data. Don't fall for the narratives. Don't fall for the people sort of doing these mental gymnastics to try to figure out why it's going to be different this time. The status quo remains unchanged until proven otherwise.
A useful way to conceptualize this is by comparing Bitcoin's behavior against gold to how altcoins behave against Bitcoin. In the early stages of a crypto cycle, altcoins often experience explosive growth, what we call the initial capitalization phase. But this phase doesn't last forever. Eventually, altcoins stop making new highs against Bitcoin and begin to oscillate within a range, often trending downward over time. The same framework can be applied to Bitcoin versus gold. Bitcoin had its own initial capitalization phase against gold where it dramatically outperformed. Now it appears to be entering a phase of consolidation or even decline. Instead of continuously making new highs, Bitcoin may oscillate between extremes, ultimately revisiting previous lows. This is a critical mindset shift. Just because Bitcoin once outperformed gold does not guarantee it will continue to do so indefinitely.